Hey guys, welcome to the Market Nerd. This is going to be a quick monthly overview of what is going to happen within September. Now, from a fundamental perspective, several events could cause high volatility and push the dollar even higher. During the next few weeks before closing the quarter, the main central banks will announce their monetary policy adjustments and new interest rates. We also have inflation and productivity reports that are highly anticipated and will set the tone for the last quarter of the year. This month is expected to carry a lot of volatility and surprises. During this video, we're going to talk about the expectations that we have for the events that are going to cause the most volatility, as well as our perception of what is going to happen within the charts. Now, first of all, on September the 1st, we saw a surprise move from the DXY, or the dollar index, which came close to the 110 level we had already anticipated and talked about during different fundamental sessions over the past couple of weeks. In fact, it came so close to it that it only fell short from that mark by 2.3 pips, reaching the 109.977. Now today, during September 2nd, we saw one of the most important reports within the market. We saw the non-farm employment change. The expectations were that it was going to reach close to 300,000 new jobs. In reality, it actually surpassed that mark, coming to 315,000 new jobs during the month of August. But another surprising part of the employment reports was the unemployment rate. Our expectations were actually placed on that number being surpassed. And actually, we wrote about it within our fundamental chat. We anticipated that there was going to be a lot of volatility when the news came out, and also that it will take the dollar higher against other currencies and assets, which is what ended up happening after a couple of hours from the release of the news. Another very relevant event will take place on September the 8th. Especially because of the speculations around it. The European Central Bank will announce the new main refinancing rate, which in July was raised by 50 basis points, going from 0% that had been held for about over a decade to 0.50%. This time around, during the Jackson Hole Symposium, there were some representatives of the ECB that actually signaled that a 75 basis points is actually on the table right now and it could be delivered this month. Now, if we saw such an aggressive move, it would actually benefit the euro if the reports that are surrounding it by the US show weakness within the dollar index. Now, we talked about also inflation reports, and on September the 13th, we actually have the CPI reports from the US. This is one of the events that is going to cause the most volatility within the market. This is an actual direct reflection of the inflation within the US. Last month, we had a surprise with inflation being kept down at 0% for the month of July. Now, if something similar were to happen for August, we will see that the dollar will continue trading higher and probably set a new higher high. And talking about inflation, the very next day we actually have the CPI reports, and this is a yearly report from the UK. Now, what is expected here? Now, we have to keep in mind that last month the result came at 10.1%. This is an increase in inflation that is compared to the same month last year. Now, what happened with this? Well, it actually contributed to weakening the pound. Why is that? Well, it seems like monetary policy adjustments and interest rates adjustments as well have not been efficient in order to control inflation within the UK. Now, of course, we also have to consider that the UK has been kind of sluggish when it comes to interest rate increases. And they took a smaller, or let's say, slower approach towards it. Now, if they were going to be more aggressive regarding that, then we could see an improvement within the valuation of the pound, and we could see that it could probably appreciate against the US dollar and other assets within the market. Now, talking about relevance, one of the days that is going to yield most volatility is going to be September the 15th. Now, during the early hours of September 15th, we're going to receive the employment reports from Australia. Later on, we will see also the monetary policy adjustment and official bank rate from the UK. And to close it all up, we will have also the core retail sales and retail sales reports from the US. Now, this is going to generate a lot of volatility since the early hours of that day. Now, when we talk about the retail sales reports of the US, we have to consider that this is one of the most important indicators of the economic health of the US. We have to watch out for it and see what it will generate within the market, because it could set the pace for the next couple of days before we have the meeting of the Fed, where they will announce the interest rates from the US and the monetary policy adjustments. Now, another relevant thing that we need to consider about September the 15th is the official bank rate of the Bank of England. Now, during the past couple of months, we saw a slow pace of increases by 25 basis points. But last month, that increase was actually doubled to 50 basis points. That created a small surge after the news had been revealed, but the problem is that it was overtaken by the release of the NFP or non-farm payroll from the US. And that just happened the very next day. This time around, there has been a lot of talks after the Jackson Hole symposiums, and there's the probability that the Bank of England will actually increase interest rates by 75 basis points. If that were to happen, then we will probably see a surge within the British pound, and if the following reports that we will have from the US are not strong enough, then we could see that trend would last for a couple of days. Now, another important event is the flash purchasing managers indexes that are coming from Europe and the UK on September the 20th. This is going to be for both sectors, manufacturing and services. These indexes have been consistently dropping over the past few months, and the expectations are that this time we will see some improvement. If that were the case, we could see a euro and pound that will trade slightly higher. Remember that also the pound will probably have some impulse coming from the monetary policy adjustments that will occur a week before. Now, if that were the case, the only thing that could change the trend will be what is going to happen on September 21st. On September 21st, we're going to have one of the most relevant events that will probably create the highest volatility for the month. And we're talking about the meeting of the Federal Open Market Committee, or FOMC, which will establish its new economic projections and funds rates. Now, the expectation based on recent declarations by the head of the FOMC, Jerome Powell, are that similar increases will happen as to what we have seen within the last month, which is 75 basis points. If this were going to happen, or if they were more aggressive, then we would see a dollar that will actually take off and start trading higher, and that will actually depreciate other currencies and other assets across the market. That has the potential to actually change the trend within the market and set the pace for the last quarter of the year. The very next day, September 22nd, will actually yield for us the monetary policy adjustment and new interest rates for a couple of banks. And we are talking about the Japanese Central Bank and the Central Bank of Switzerland. Now, for the Japanese yen, this time around, the expectations are that political pressure from the Prime Minister will force the Bank of Japan to increase interest rates for the first time in many years. Bringing it up to 0% will actually not do, so a higher than 10 basis points increase is expected. Otherwise, it will not be enough to provide strength for the yen. Now, for the Swiss National Bank, we have seen that they have increased interest rates by 50 basis points, and still, it is one of the lowest in the world. Now, this time around, we have seen that their CPI reports actually came a little bit higher than anticipated. We might be able to expect another 50 basis points or 0.50% increment in order to keep inflation down. Now, the last relevant event that we will see for the month of September will be on the 30th. We will have the Core PCE Price Index monthly report, and this is the personal consumption expenditures. This is another significant measure of inflation. This is actually going to accentuate the confidence among consumers and overall improvement of the current levels of inflation. This result has larger ramifications within the US economy, and it could lead to growth within the GDP. Such a positive result will come to provide more bullish sentiment for the dollar before the beginning of the last quarter. This could create an expansionary move to the upside for the dollar index, which will heavily reflect in the depreciation of other assets across the market. So, the next part of the video, well, we're going to talk about what we expect to happen within the dollar index and how this is going to reflect in other currencies. We're going to draw our projections here, and we're going to show you what we expect to happen. So, before we do that, we have to go into a higher time frame. Remember that this is the projection for the month, so we cannot be looking at a 1 hour time frame chart, but we're also going to have to modify that and go into a daily time frame. Now let's do it, and we go there, and now we have the higher time frame perception. Now I want to, well, as you can see, it is quite crowded there, but I'm going to get rid of all those drawings right now. You see how the dollar has been trading higher, And what we expect right now is that, of course, it will generate some retracement. You can see here how it has constantly retraced, and it has somehow respected certain levels that are key. And we're going to see that happening as well this time around. Now, based on everything that we discussed before, we see that the dollar could be reaching higher, and we talked about it surpassing the 110 level. Now, why do we assume that this is going to happen? Well, first of all, from a technical perspective, we're going to see that there are some imbalances from about over 20 years ago that have to be filled up. This is one of them that I'm talking about. Right now, we have seen this one already taken out, and now we're talking about this next area that needs to be filled up. Now, let me show you what we expect to happen, or what we have drawn that may happen within the market. Now, based on price action, this is what we expect that will happen within the month of September. You can see how we started drawing this here based on what we have seen within the first 2 days of September. Now, we expect this level to be taken out. Of course, there might be some retracement. We're not going to draw every single small move, but in the big scale, and we're talking about the daily time frame right now, this is what we expect to happen within the dollar index up until the 30th of September. Now, how that is going to be reflected within other currencies, then we're going to take a look at a couple of them. Now, like I said, we're going to talk about what we expect to see within other currencies. This is what we expect the euro to do. It might retrace lower and then start trading higher as the dollar retraces lower. Then, as soon as the dollar starts spiking up, we will see the euro going in the opposite direction. Now, for the British pound, we also expect a similar movement, and this is going to reflect the opposite of what the dollar index is going to be presenting at that time. Now, as I said before, it might trade lower, start retracing back up as the dollar is retracing lower, and then once the dollar starts spiking up as the results come out, and this is going to happen around the 20th or the 15th, between the 15th and the 20th of September, we expect that the reports that we will receive from both central banks and also from the Fed will take the dollar higher and close that month actually higher for the dollar index. Now, that is going to be reflected in the opposite direction and probably reaching even lower for the British pound. Remember that whatever move the dollar does, the British pound actually does something quite in the opposite direction with a farther range. Now, this time around, we're talking about the Australian dollar, and what do we expect to see there? Well, you have to consider that the Australian dollar actually reflects the opposite of the US, but sometimes with shorter moves. So this is what we expect to see within the Australian dollar for the month of September. Probably there will be some retracement in the opposite direction of the dollar, but at the end of the day, those moves are going to be shorter compared to what other currencies will do. Alright guys, and that concludes the analysis for the month of September. We will talk about other details that we will see along the way, and we will keep you posted. Remember to visit our website and join our community to receive constant updates of what the market is doing. As always, trade safe and see you on the next time.